the JP Morgan Equity Premium Income ETF, ticker symbol JEPI. Unlike SCHD and VYM, which pays dividends quarterly, this ETF pays cash flow monthly. This is a very interesting ETF because it follows a very different strategy than SCHD and VYM. It selects stocks on a proven bottom-up research process with stock selection based on proprietary risk-adjusted stock ranks, which is just legal jargon for we choose great stocks but won't tell you our secret sauce, and uses options overlay that flexibly adjusts with the current market. So it uses stocks and options to generate its attractive current yield of 7.5% dividends. JEPI is an actively managed fund with an expense ratio of 0.35%, which is high, but the 7.5% dividend more than makes up for it. JEPI's main goal is to seek current income while maintaining prospects for capital appreciation. So, while it's looking to generate income for dividends, it's also looking to grow capital. Its main strategy is a bit different than a covered call strategy like ticker symbol QYLD because it seeks to provide the majority of returns associated with the fund's S&P 500 benchmark index while exposing investors to less risk through lower volatility and still offer incremental income. In order to do this, they invest in stocks with a lower volatility than the S&P 500 and ELNs or equity-linked notes. This basically means it seeks to provide investors with S&P 500 returns with lower swings in stock price and monthly dividends that are steady, and may invest up to 20% of net assets into ELNs, which are basically like strip bonds or a debt instrument where the principal and regular coupons are sold separately, with a call option on a specific security. JEPI is currently $56.12 with net assets of $9.83 billion. It has a 52-week range from $52.54 to $63.67. Top 10 holdings include Progressive, Bristol-Myers Squibb, which just had a 52-week high on Friday, AbbVie, and Hershey, along with ELNs and call options. Its holdings are mostly exposed to the healthcare and consumer staples sectors. Healthcare accounts for 12.8% of its portfolio, while consumer staples account for 11.9% exposure. Since JEPI is a new kid on the block, its dividend history is brief. In 2020, the dividend was 49 cents. In 2021, it was 26 cents. And currently, it is 51 cents. Of course, we had a few special dividends, so this varies a bit. While it did pay a dividend throughout 2020, the dividend has fluctuated and returns have been more volatile than SCHD. While the dividend has ebbed and flowed each month, the 5-year average dividend yield is 7.51%. Now, this 7.5% is average, and it is what I'm expecting for the next years to come because I believe that management has a very solid process, and I believe that 2020 was kind of a fluke year, and that is when they started. If you're looking for monthly cash flow, a high dividend, and reduced volatility, this is a great option. Just be aware the dividend may fluctuate monthly, but hopefully stay as an average of 7.5% or increase. And this ETF is a bit newer, so we don't actually have a long track record on performance of the stock. The Global X NASDAQ 100 Cover Call ETF, ticker symbol QYLD. This is a cover call dividend ETF that owns all of the stocks in the NASDAQ 100 and sells at-the-money call options on the NASDAQ 100 every month. This is in order to maximize option income received. Selling covered calls is a great strategy that I personally use to generate additional income on my dividend stocks. It is an incredibly low-risk option strategy, with the only downfall being investors may not receive as much capital appreciation as investors that just own shares if these stocks unexpectedly rocket to the moon in share price. QYLD is currently at $17.62 with a dividend yield of 12.08%. Net assets are $6.85 billion with a 52-week range of $17.01 to $23.15. Since it tracks the NASDAQ 100, its portfolio consists mainly of technology. Top 10 holdings include the FANG stocks with Apple, Microsoft, Amazon, Tesla, and Google. QYLD's dividend history, while volatile, has paid dividends every single month. In 2014, the dividend was 25 cents. In 2015, it was all over the place from 15 cents to 23 cents. In 2016, 2016, it was 12 cents to 22 cents. From 2018, it was higher with 17 cents to 24 cent range. And 2020 was fairly steady around 19 cents. Currently, in 2022, it is at 17 cents. QYLD dividend fluctuates from 13 cents to 25 cents and is quite volatile. While the yield is very attractive, the dividend swings may be too risky for your portfolio. Investors also must be aware of the capital appreciation. QYLD is currently down 30% after 10 years on the New York Stock Exchange. Capital has steadily depreciated throughout its history. If you're looking for dividend growth, this is not the right ETF for you. Investors must also understand this is a riskier asset than all of the other ETFs due to its underlying assets. The Nasdaq 100 is very tech-heavy, and therefore it is not a great hedge against inflation, quantitative tightening, or higher interest rates. If you are looking for steadier dividends and possible increases in capital appreciation, ticker symbol XYLD, which is the Global X S&P 500 covered call ETF, may be a better option for you. If you just want a very high dividend yield for monthly cash flow and believe tech will continue to dominate the market even with higher interest rates, this may be a great ETF for monthly dividends.